Hey everyone, it's Nick with Us versus Herd. I want to talk about some of the advantages and then some of the disadvantages or pitfalls of trading with a small account. What I mean by small account is anything under $25,000 is considered a small account, and it's under the PDT rule. But first, if this video is of value to you, please hit the subscribe button below. We also have a free options trading group. Hit the link below; it's in the description there. Join that. We got new members joining every day. We post trade ideas in there, and we're trying to bring the Us versus Herd community together. So if you're interested in that, just hit the link below, and you can request to join our group. But getting into the small account options, and one of the things with trading or investing or anything that regards to whether you're doing stocks or options or futures or whatever, is people think that, hey, to make a lot of money in the market, I need to have a big account. I need to put $100,000, $50,000, and some people just don't have that kind of money. And there's no answer whether you should be trading with a huge account or a small account. But for beginner traders, I definitely think the advantage is to have a small account, because when you're first starting out and learning, you're not really sure. You're kind of nibbling, you're kind of dabbling, and you're kind of just not sure what to do. And definitely before you put your own money to use, paper trade. Make sure you understand the concepts of options trading. Make sure you understand the pricing of options trading. Make sure you understand how to read charts and news, and know when earnings are going to happen. Basic things like that. But with the small account, definitely I think there's some advantages there, because if you blow up your account, you're not going to lose a whole lot. Versus if you're a brand new trader, let's say you put 25,000 or 50,000 or even like 10,000, which is a lot of money for people. If you put $10,000 in an account and you go to zero and you didn't really learn a whole lot, because what people will do with a bigger account or more money in their account is they'll put on more positions, and not necessarily because they know what they're doing. They just think, hey, more positions creates more opportunity, versus them trying to just get in the right position. And you don't, to be profitable, you don't really have to have that many positions on, and sometimes less is more. And oops, gotta put my password in here. But what I was saying is that sometimes by having too many positions on, it's a lot to control. Like right now, there's quite a few positions on here, and some of these, like this Twitter one, it's a full loser. We're just holding on to it till expiration because can't really do anything with it. This is a position we had on before earnings, and it just went down. And then some of these we closed out today, made some money, and we kind of have a mixed bag here. But some people with like big accounts, they'll have a ton of positions on. I try not to have any more than 5 to 8 or 5 to 10. Right now I have 6, 8, and I had an earnings trade here, which will come off. So I try not to have for myself too many positions, because also you're exposing your risk in terms of the market. So whether you're long or short, you got to check your deltas. And when you have a lot of positions on, you're going to be more delta sensitive, because a big downturn in the market or a big upswing in the market, it's going to skew your portfolio in ways that it doesn't necessarily mean the stock's doing good or bad, or there may be news particular stock. But if the market as a whole is doing really well and you're short, or if it's doing really bad and you're long, you're going to have a lot more exposure than if you just had a couple positions on. It's a lot easier to manage. I prefer under 5 positions, just because it's easier for me to manage, easier for me to control, especially when I have directional trades on and I'm not just waiting for theta to burn out. If I have directional trades on, I'd like to not have a ton of positions on. The one disadvantage I would say is that with smaller accounts, you have to be careful and you have to choose, because you don't get to day trade. So if you make a mistake and you exit that trade, you only get 3 day trades per 5 business days, so you can't really make mistakes. Also, the other thing is that options cost what they cost. It doesn't matter how big your account is. Options are going to cost what they cost. Like a lower price stock like Twitter's in the $32 range on the lower end here, and their options are what they are. But if you go to a higher price stock like Tesla, the options are $9, $10, or even Amazon's going to be even more. You're going to be with a smaller account. You're going to not be able to trade some of these. Buying them, you can sell some spreads to lower your risk here, but if you have a small account, let's say you have a $2,000 account, you may not risk, as you can see here, if I did this spread here, a vertical put spread on Amazon, you may not want to risk 10% of your account here on a max loss to make $55. You may not want to risk 10%. So, one of the things is when you have a smaller account, you're going to be limited to some of the things that you could trade. So you're going to be probably looking at stocks under $50. So like Snap, Twitter, Square. I mean, Square is probably on the medium end, but their options aren't too expensive. Also, the IV rank is kind of low right now. So if you're buying options, you can buy in here. IV rank is low. If you're selling options, it's not really a great opportunity right now because these aren't very expensive. Snapchat had earnings on today, and we did sell some premium in there. And we did a little small position, 1350 to the 1250 put spread on that. And we did buy a couple calls just because, but we had a small call, a small put spread on here, and this was at the time of closing. We did get 51 cents for it, I believe. Yep, 51 cent credit for these right here. And the max loss is 49. We did it twice. So max loss 98, max profit is 102. Stocks right now sitting at 1309, I believe, 1307. They just reported they had a conference call right now. But, so when you have a small account, you really want to be selective on what you can do, and also you're limited to some of the products because you can't just trade whatever you want and get in and get out. So if I made a mistake and let's say I got in, I got out, and I burned a day trade, and you just got to be careful that you keep track of your day trades, because if you go over 3 day trades, you're going to get a 90-day suspension from your broker. Yes, you may be able to write them and say, hey, I'm sorry, I didn't realize it, but that's going to wear out. And one of the ways to get around the PDT rule is to, especially if you have a smaller account, is to open multiple brokerage accounts. So you could have one with Tastyworks, one with TD Ameritrade, one with E-Trade, one with Robinhood, or whoever. So you can kind of rotate the accounts if you want, if you're trying to day trade. But if you're not, like a lot of this, like this right here is a swing trade. So I opened it today, but I'm probably going to close it out tomorrow or later this week. So that's not going to count to the PDT rule. But, just be careful. So when you're trading on a small account, and not to blow up your account, don't get real aggressive. Be careful. Make sure you're trading what you want to trade. Make sure you have the right strikes. Sometimes when you're in a hurry, you select the wrong strikes, and that will cost you a day trade. Let's say you wanted to buy the $13 put, 13 strike put, instead you bought, the 12 or something like that. When you're in a hurry, that's when mistakes are made. So just definitely be careful about that. But I just wanted to kind of go over some of the advantages, some of the disadvantages that you have when you have a small account. I definitely don't think that having a small account is bad. I think that everyone should start trading out small, because for me personally, and if I was new to trading, I would definitely want to lose less money than putting 25 grand, 50 grand to work, because as a new trader, I talk to new traders all the time, and they lose most of their initial investment starting out. So, don't get discouraged by that. And definitely, like I said at the start of this video, paper trade, because you need to understand how the market works, and you also have to understand how the underlyings work. And what I mean by underlyings is the actual stock itself. So like Snap or like Twitter, not necessarily the options, how it moves. Each stock has its own personality. Each stock does different things. Each stock has different CEOs. Each stock is just completely different. So you got to get used to trading those, especially when you're trading options on it, because it gets kind of violent on some of the pricing. So, if you have any questions, leave a comment below. Like I said before, hit the link below to any of our social media profiles. Hit up our options trading group. We'd love to see you there.